Welcome, ladies and gentlemen, to the company introduction of Foran Mining at Commodity TV. The copper market looks more and more to move into a deficit despite lower Chinese growth, but EVs still growing in July this year, where full electric vehicles made up to 14.9% of all car sales globally, with about 783,000 EVs sold that month, according to New Automotive's Global Electric Vehicle Tracker. That means more copper for the cars, but also the charging infrastructure worldwide has to grow. Also, large copper producers like Codelco and First Quantum cannot fulfill their production growth targets, with many other mines having problems with their expansions. But the copper demand is rising further, and we think that from 2026 latest we will remain in a deficit for many years. Even more important are companies like Foran Mining, bringing their McIlvenna Bay project into production in Saskatchewan in Canada. The company is the only single project developer worldwide with an environmentally approved project. The McIlvenna Bay project has reserves of 25.7 million tons with 2.5% copper equivalent grades. In addition to copper comes zinc, gold and silver, which are all metals with high demand, and in the case of silver, the market is already in the 6th year in deficit. In addition comes an indicated resource with 39 million tons and over 2% copper equivalent grades, and inferred resource with over 5 million tons and 1.77% copper equivalent. The 2022 feasibility study, with price assumptions of $4.53 per pound copper, $1.64 per pound zinc, and $1,936 per gold ounce, and $24.50 for an ounce of silver, showed a pre-tax NPV with 7% discount of almost $1.5 billion and an IRR of 46%, with an after-tax payback period of 2.2 years only. If we use the base case economics, it outlined a pre-tax NPV with 7% discount of $678 million with an IRR of 26%. Even with a copper price of $3 per pound, the project delivers a pre-tax IRR of 21%. In July 2024, the company announced strategic investments by Fairfax Financial, Agnico Eagle and other cornerstone investors. They also did their formal construction decision for Phase 1 at McIlvenna Bay and advanced the planning for Phase 2. $222 million came from a brokered private placement, with participation indications received from various existing long-term shareholders, including Fairfax, underscoring their continued strategic support. The strategic investment from Agnico Eagle will bring another cornerstone shareholder to the company with an expected 9.9% pro forma equity ownership on a basic voting basis. In addition, they got an upsized credit facility to $250 million with Sprott, which will provide greater financial flexibility as the company proceeds to full development of the McIlvenna Bay project. The Phase 1 capital budget is expected to be eligible for federal investment tax credits, potentially leading to refundable investment tax credits of approximately $130 to $150 million. Initial production is expected in Q4 2025 and commercial production is expected in the first half 2026. The Phase 1 capital costs are estimated at $604 million to commercial production, optimized and focused on initial phase production, while laying the groundwork for potential future Phase 2 expansion opportunities. The Phase 2 expansion, planning with Foran evaluating a phased expansion approach, could leverage the recent exploration discoveries at the Tesla and Bridge zones. The company has initiated modeling and expedited the necessary fieldwork to assess the estimated growth potential identified in the Tesla exploration target. The initial exploration target for further exploration at the Tesla zone is 28 to 45 million tons at 0.9 to 1.3% copper, 3.6 to 5.4% zinc, 22 to 34 grams per ton silver, and 0.2 to 0.3 grams gold per ton, which leads to 2.2 to 3.2% copper equivalent. The Tesla zone remains open in all directions, with ongoing summer drilling aimed at extending known mineralization. Concurrently, high-priority regional exploration targets are being tested, highlighting the growth potential of the project. Foran announced lately good assay results from the Tesla expansion drilling and a newly identified gold zone which intersected 22 meters at 5.6% copper equivalent. The new gold and silver-rich zone identified at Tesla is potentially strengthening at depths, and the Tesla zone now measures 1,200 meters along strike and up to 700 meters down dip and remains open in all directions. The ongoing summer drill campaign tests high-priority regional targets and further definition at Tesla. The pointed figure chart has now a 3-time bottom and is in the making of an upward reversal. The first price target is $4.5 Canadian, and a cyclical buy signal would be $5 Canadian and 10 cents, with then a price target of $10.5 Canadian implying. You find all information also on our Commodity TV app in German and English, plus all about commodities. We are happy for a like, but more important, please subscribe to our TV channels. Please note the disclaimer. The share discussed is or will be part of the SRC Mining Special Situation Certificate. Thanks for watching us, and bye-bye from Switzerland.